Well, are payments companies ripe for the picking? Is the US inflation number really as scared as it looks? And finally, will the Reserve Bank really raise interest rates in June? I'm Peter Switzer, he's Paul Rickard, and we're mad about money. Well, Paul, payments companies, they've really copped it in recent times. You and I quite like payments companies for the future. Are they ripe for the picking?
Well, Peter, they certainly, within the tech sector, payment companies have probably been the hardest hit. And so we've seen that in companies like Zip, we've seen email payments, we've also seen the impact from the US companies, PayPal, and of course, Block, which is now the owner of the Australian Afterpay business.
Yep.
But a story this morning that, Bain & Co. were running the ruler over email payments. I mean, that does say that there are value seekers out there thinking about whether it's time to reprivatise some of these companies. So I think we're going to see a bit more of that, Peter, because they've come up so far.
Yeah.
The story goes on to say that perhaps Bain & Co. have walked away from email payments, but where there's smoke, there's fire. I reckon there's going to be other people looking at opportunities because the fall has been so big.
Yeah, it's interesting, Paul, you bring this up at a time when Afterpay apparently hasn't come up with a very good result, and they're pointing the finger at problems with debt repayments from some of its customers.
Yeah, look, I mean, I think there's probably this whole sector, particularly the buy now, pay later sector, got way overvalued. I think there's no doubt about that. And we've really seen that in the share prices, particularly like Zip, which has come from something like about $12, Peter, at this peak, down to, I think, yesterday about $1.40, maybe even a touch below.
Yeah.
That's a huge fall of almost 90%. But there's got to be value there, and I think it's crossed the sector. So we've seen an enormous sort of rout in the whole payments markets. I don't think you buy for that reason, but I'll just be wary that clearly, there's smart money, smart capital out there looking at some of these companies and saying, look, there's some good value out there.
Yeah, I totally agree. I think payments companies have been oversold. I think the prices in the past were ridiculously high, but for the patient long-term investor, if you pick the right payments company, I think you'll either get the stock market rewarding you, or maybe a private takeover merchant like Bain will eye them off and probably offer you a much higher price than is prevailing today with these companies.
Yeah, I think you're right there.
Okay, let's go to the second topic, Paul. The US inflation number came out 8.5%. I don't think we've seen a number like this for decades, 40 years or something like that. And it makes a lot of people worry, well, if inflation is going to go up to 8.5%, are we going to look at double-digit interest rates? No, I don't think so. But Paul, what's your view on that number, the 8.5% number?
Well, I think we're close to the peak, and in fact, the market took heart from the core number. Now, the core number excludes things like energy and food, and that was only 0.3% for the month, I think, Peter, which was actually lower than the 0.5.
Yeah.
That was better.
Hang on, you just had a technical blip on the number. So for those people who missed it, it was 0.3, but the experts were thinking 0.5, and that actually quite excited the bond market, Paul, didn't it?
It did. I thought that's what I said.
Yeah, no, but you had a technical blip. The Zoom technology blipped on the number, and there'd be people out there watching you go, what was the number, Rickard? What was the number? Anyway, we've sorted that out.
Okay. Look, apologies for the technical blip. That's the challenges of working in the gig economy, isn't it?
Yes.
It's not perfect, but it's close, right?
It's very close. Yeah, okay, but the bond market quite liked it, Paul, wasn't it? And yields came off a bit, which is a good sign, because I think there's over worrying in the bond market about future inflation. The fact that this core number came down sort of showed that a lot of the headline inflation, 8.5%, is being forced by the Ukraine war and the impact on oil prices and things like that.
Yeah, I mean, that's right, Peter. I mean, and of course, early on in the days, you'll recall that a lot of this was due to sort of so-called supply chain issues. And the best example of that, of course, has been the increase in used car prices, which are still, I think, year on year in the US are about 35%. And that's because of the problem with chips, right? Because
you can't get
the
new cars,
manufacturers
buy
can't
old.
get their hands on the chip, and make the new cars. So used car prices have gone through the roof. We've seen the same in Australia.
Yeah.
Now that factor at some stage will go away, and that's why I think that the whole argument about whether this was transitory or permanent, the jury's still a little bit out there. I guess there's more structural inflation than perhaps we were thinking 3 months ago.
Yeah.
But the market's pricing in a pretty big number. And so the 8.5 is a scary number, but the core's not too bad. And maybe I think people are starting to say, well, maybe we've seen close to the peak. So we've got to see that come down for the bond market to get a lot more confidence. I think it's probably too early to say it's a rally. It just didn't go up. It came off about 5 basis points, which is positive. But for the bond market really to turn around and say we're over the worst of it, you've got to see a few more months of lower core data. So that's what the market's going to be looking for. Scary numbers, but maybe not as bad as perhaps the market may have been, I won't say wishing for, but expecting.
Yeah, but so I've seen two things in recent weeks where the supply chain issues are improving. The supply of labour in America is improving. We've seen the jobs report, Paul. There was a lot of people not working because of the coronavirus and whatever. They're coming back to the market. And this used car, I think the fall in the smaller core rise in inflation was because used car prices really dropped a lot. And that's another good sign about the supply chain. Now, finally, Paul, and this is related to inflation, do you really think the Reserve Bank is going to raise interest rates in June, or could it even be May?
Yeah, look, I think they're going to avoid May, although I think we've got the CPI data coming out. That's the inflation data coming out on 2 weeks today, Peter. So
before the election.
Look, if that's really bad, maybe that puts pressure and the economists will get excited. I mean, they have actually raised, I think, before, during the last, or 2 election campaigns it was before, correct me if I'm wrong. So election campaigns don't rule it out. I think the interesting question with June, Peter, there's so much pressure that they're almost inevitably going to raise rates. I just can't see what the point of raising it, the cash rate is from 0.1 to 0.25, right? You may as well go a lot more. It just seems to me like a waste of time. So I don't know. I mean, that's what the market economists are telling you. They're just going to lift it by 15 basis points. Well, I'd say almost why bother? Look, we'll have to see that out. I mean, that's my take. I think we'll see a bigger increase in June, but nothing in May. What's your view?
Yeah, I think, Paul, that we're going to see an interest rate rise, best case, in August. The fact that most banking economists are saying June, well, I think most of them said that before the budget, and that was before the 22 cents a litre reduction was introduced. And also, if I was the Reserve Bank governor, I'd be saying to myself, well, I want to watch this Ukraine war thing. If we get an agreement before June, well, then I know oil prices are going to fall as well. So I might hang back. The pressure from the banking economists on the Reserve Bank governor to raise interest rates is pretty high, and he may well succumb.
Yeah, market pressure's pretty high. Markets often get it wrong, though. So that's the other thing.
Yeah.
I mean, I think it's just when you look back, and this is what, even as recent as October last year, the Reserve Bank governor publicly said in his press release that there was going to be no increase in interest rates until the earliest of 2024, right?
Yeah.
And here we are in April of 2022, right? 6 months later, talking about the prospect of an increase in June or even May, and your view is August. So it's a huge about turn for the Reserve Bank.
Well, the lesson is, Paul, you never trust economists, and you definitely never trust bankers. I'm Peter Switzer. He's Paul Rickard, and we're mad about money.